In that three, SY become. SY become. There are three units. First unit is bank reconciliation statement. Bank reconciliation statement. On this ground, they will ask you one questions which carries 20 marks. Bank reconciliation statement. Another topic which is given to us is accounts of partnership firm. Accounts of partnership firm. Accounts of partnership firm. And third topic which is given to us is accounts of not-for-profit concern. Accounts of not-for-profit concern. Profit concern. So there are three topics on this topic. They will ask you each and every questions on this topic. So in that first we will see bank reconciliation statement. In bank reconciliation statement they can ask you what is bank reconciliation statement. What is bank reconciliation statement is yours first. What is bank reconciliation statement? Reconciliation statement. What is bank reconciliation statement? In that we will see that bank reconciliation statement is a statement which is prepared by bank to ascertain the difference between bank balance as per passbook and cash book. So first we will see what is the meaning of passbook. One in that will be passbook. In that passbook. Passbook means it is just a copy of customer's ledger account. And that passbook just it is remain in bank. So for each and every customer they give to us, it is a copy of customer's ledger accounts. Means in that copy they can show you how much balance with banks, how much money deposited, how much money withdraws, how much interest charged, so and so forth information they are mentioning to you. And they will give to you the copy of customer's ledger account in the passbook. And then you know that cash book. Cash book. Cash book means it is the summary of receipts and payment. All the receipts and payments will be going on in this direction. So on the key form, cash book, debit side there will be the receipts, possible receipts will be there, and on the payment side there will be the payments there. Payments and receipts. Possible receipts and payments will be there. It is a summary of receipts and payments. So these are the two books that can be taken into consideration. That is, and in that we will prepare the bank reconciliation statement. Once again, I will explain the meaning for this. What is bank reconciliation statement? Bank reconciliation statement is a statement which is prepared by a trader. It is prepared by a trader to ascertain the difference between bank balance as per passbook and cash book. Now, so for that, some important matters you can remember in this connection, and that matters is like this. First will be, actually there is no difference between bank balance as per cash book or passbook. Actually there is no difference, but there are certain transactions that can be recorded only in passbook and not in cash book, or there are certain transactions which is recorded in cash book and not recorded in passbook. For that, there are some showing the causes or reasons which can show the causes or reasons. In that cause will be, we show the difference. First will be, that is, check issued but not presented for payment in the one cause. Means if you issue the check to the various customers, but that customer is not presented that check into the bank, then it can show the difference balance. Another will be there, that goes towards the check deposited but not collected by bank. Check deposited but not collected by bank, which is goes to you, and in that connection it can show the difference. Third will be interest credited by bank. There are interest is credited by bank only and not in cash book. So due to this reason it can show the difference between. Then amount collected by bank on behalf of customers. Means sometimes customers can give the standing instruction to the bank that so monthly we must collect some money from this or rent collection, commission collection, or sometimes rent paid, interest paid. So like that they will give to you, and to these reasons it can show the difference between. Then amount collected on behalf of that, then commission services charged by bank. So by charging the services and the commissions by bank, it shows the difference between this. Then direct payment by customers. Sometimes customers directly deposited the money into the bank account without giving the instruction. So due to this reason, it can show the difference between these two. Then another will be standing instructions, sometimes given by the bank, given by the customer to the bank, and on behalf of that, they may pay the money. For example, rent paid, life insurance premium paid, another they will give to you, electricity bill paid. So due to this, they can give the standing instruction to the bank, and with the help of that, it shows the difference between. Then dishonor of check. Dishonor of check means sometimes check is issued, but it can be dishonor, and dishonor of check will be, there are so many causes. There is no sufficient fund. Due to this, they can dishonor the check. Then date is not there, signature is not there. It can show the difference, and they can dishonor, bank do not make a payment of the check. It's not said to be dishonor of the check. And what is honor of check? When bank paid the money, means bank paid the money of the check at the time. This is called the honor of check. Sometimes dishonor of check can be mentioning like this. Then there are certain errors that can be made mistake. So errors means sometimes it shows debit balance surplus or credit balance surplus or over valuation of the some balances in cash book or passbook. To do this reason, it can show the difference balances there. Then received check and sent to the bank, but recorded intimation given later on. So these are the various grounds. To this ground, it shows the difference between this. But by preparing this, just to remember here, just to remember how to prepare this. So first will be, you can considering here, balance first will be, when cash book shows debit balance, means it is favorable balance, Favorable balance means that there will be the balance in the bank. When a cash book shows credit balance means this is the overdraft balance. Another thing will be third, passbook shows debit balance, means it is overdraft balance. Overdraft balance. Then the passbook shows credit balance. Credit balance means it is favorable balance. By finding these balances, we may prepare a bank reconciliation statement. How to prepare? From the top, you write the name of the customer, surname of the trader. We prepare the bank reconciliation statement, and second line you write the bank reconciliation statement. Bank reconciliation. Bank reconciliation statement add on date. Then you start like this. Prepare the format is like this. First will be our particulars, and here will be amount in rupees. So just if you start with the bank balance or balance as per cash book, as per cash book, you can take this balance. There are certain items which will add here. Take the add and less, and you will end and come across the last balance as per balance as per passbook. Because here will be 1, 2, here 1, 2 in the items, it comes to here like this, goes to the outer, take the additions here, and here will be 2 items if they are any, take this total and you will get the balance, and this is the balance. If you start with the passbook, comes across end with the last. That is, if you start passbook, come across the last end will be the cash book. So these are the things you can remember in this connection. So in the question paper they asked here, just see here. What is bank reconciliation statement? What are the importance of bank reconciliation statement? And explain the procedure of bank reconciliation statement they are going to do. So it is the importance will be bank reconciliation statement is prepared by your trader, and it is prepared to finding out the necessity, and some reasons are there. So due to that reason they can prepare the bank reconciliation statement. Here they are given to you in the books. In the books they are given to you need for bank reconciliation statement. So here they are given to you bank reconciliation statement, then meaning, and the balance sheet is given to you showing the difference between these things, need and important. So each and every trader, it is necessary, or it is necessary for each and every businessman to reconcile both cash book, cash balance as well as the bank balance, and they can ascertain the result, and for that they can prepare a bank reconciliation statement. To locate the difference between passbook and the cash book balance, the reconciliation statement is prepared. The necessity to preparation of the bank reconciliation statement is to locating the balance as per cash book and balance as per passbook. Suppose you deposit some money in bank, say for example 1 lakh rupees deposit, and giving standing instruction to the bank, you go out to the abroad, and standing instruction will be pay life insurance premium 1000 per month, then rent of rupees 2000 per month, and another electricity bill whatever it is you can pay. So by paying it, it will shows means per month regularly bank can go on making payment for this, and after going, if you have gone to the abroad and after coming 6 months it will check the balance. So that balance on the passbook remains the same, because means when you are not updating your passbook at that time the balance remains the same. That's why it shows the difference between these things, because you have no standing instruction to making the payment of rent, life insurance payment, electricity bill, or any other expenses you are saying to the bank to make the payment and give the standing instruction. So from time to time bank will be making this thing. And when we are up to date in the passbook at that time, we can show the real balance at that time in this connection. That's why we have to prepare the bank reconciliation statement. Nowadays, every field has got the computerized, and bank are not the exception to this. If the information provided to the computer is wrong, it will create a lot of problem and may show that is inaccurate balance. For having control on all the things, bank reconciliation statement is become very necessary, and preparation of these things. So friends, we can ask this 2 question which is asked for you. That is, what is bank reconciliation statement? So here in this case, they are given one problem here which is asked for here 17. That is, SY becomes examination 2017, they can ask for B questions. So now just see here, from the following information, prepare a bank reconciliation statement of Mahesh as on 31st December 2000, 31st January 2016. So in that connection, they are given to bank balance as per cash flow is 15,000. Check of rupees 4,500 deposited on 24th January 2016 and the same collected on 3rd February 2016. Check issued 3,500 not presented for payment. Then bank has credited the account by 2,700 direct deposits by the customer. The information of the same was received in the month of February 2016. Then bank has debited the passbook for bank charges for rupees 300. No entry was made in the cash book. So like that, so they can ask the problem. So here two important things just you can remember in this case will be, so there are certain entries which can be recorded in the cash book only. For example, just see, these are the things you have to go on making. Remember, so number one will be here, check issued, but not presented for payment, not presented or payment, not presented for payment. Check issued but not presented for payment. Another will be check deposited or check sent to bank, check deposited, or check sent to bank, check sent to bank, but not collected by bank, but not collected by bank. So for this purpose, so these are the two things that always it can be entered in the cash book. And there are certain entries they will do it, passbook is debited, passbook is credited to that extension in there. So there is one principle to ascertaining the bank balance as per passbook and cash book. So for favorable balance, add means less you have to do, less, add means less, and less means add you have to do, add. Why add means less? Because there is a principle, one will be coming from more to less, and coming from less to more, add. So these are the principles that can be followed here in this connection. Now we'll solve this problem here in this case, which is asked for us in the year 2017. By following these instructions, just see, and we'll solve this problem here in this case. Just see. So here they are given to us. Now just see here. They are given to us bank balance means prepare bank reconciliation statement of Mahesh. So in the books of Mahesh we have to prepare here. In the books of Mahesh first. The name of will be in the books of Mahesh. In the books of Mahesh, we have to prepare the bank reconciliation statement. Second line, bank reconciliation statement. Bank reconciliation statement. Bank reconciliation statement as on they ask us as on 31st January 2016. Then you have to prepare your bank reconciliation statement in this manner. Just see. Like that we have to prepare here. So here, like this. First is particulars. Mostly they will give you 5 items or 5 marks. So you have amount in rupees and amount in rupees. So they given to us balance as per cash flow. Right here, first will be balance as per cash flow. Sorry. Balance as per cash flow. Balance as per cash flow. What is that balance as per cash flow? They are given to us 15,000. Then we have to add and less these things just here. Check rupees 4,500 deposited into bank 24th, but the same was collected on 3rd February. So here just see, this is the cash book, and you know cash book, this is the receipt side, this is the payment side. Whenever check deposited, it comes on the debit side 4,500 So receipts will be there, and then due to receipt, it is balance will be more. When balance is more, then we have to less it, deduct it. Because by depositing the money, cash book shows more balance, and whenever cash book shows more balance, as per the principle coming from our less, it will be deductible. Therefore, this item goes for less. Less. That is check deposited, but not collected. Not collected by bank. Check deposited but not collected. It is collected on 3rd February, the next month, after the reconciliation date. Therefore, it shows more balance, cash book shows more balance, and by showing the more balance, it will be more to the less. Coming from more to less, it will be less, and the amount is, your source is 4,500. So, 4,500. Then next is check issue. So when check issuing 3,500, if you issue the check, it goes on the payment side. And due to the payments, this shows less balance. Because payment is there, means it shows the less balance, and less means principal is coming from less to more, it will be added there. We have to add these items. Because cash book shows the less balance here, coming from less to more, and we have to add here in this condition. So add. So add means like here check issued but not presented for payment. Just check issued but not presented for payment. Not presented for payment. Not presented for payment. The amount of the check is 3,500 euros. So in each and every problem, these are two things that can be coming. Without these two entries, bank reconciliation problem cannot be built up. So remember, and I have these things here: check issued but not presented for payment, and check deposited but not collected. So here, by issuing check, cash book shows less balance. Whenever less there, we have to add it. And for depositing, cash book balance more balance. When more means we have to deduct it for this thing. Then third thing. Fourth thing that was to us, bank credited the amount 2,700 for direct deposit. So this entry will be happen in the passbook. So it is just reverse form. This is the payment side of passbook and this is the receipt side of passbook. Whenever if you deposit, they are given the credited, bank has credited 2,700 for direct deposit. By a customer, the information of same received in the month of February. Means whenever deposit, the amount is deposited 2,700. Due to deposit, passbook shows more balance. More balance. But we don't want passbook, we want cash book. Cash book shows less balance. Less means we have to add it here. We have to add. So therefore, add here direct deposit by a customer. Direct deposit by a customer. Direct deposit by a customer not recorded in cash book. Not recorded in cash book. Because just see here. So receipt means deposited means passbook shows more balance. But we don't want passbook, we want the cash book. Cash book shows less balance. Whenever less is the principal coming from less to more, and it will be added. Direct deposit, add the amount of direct deposit is what to you? 2,700. 2,700. Then one more thing is bank debited the passbook. So passbook, just see this is the passbook, you know, and it is debited means payment made here and here receipt. So here payment by debiting passbook 300, it shows less balance. Less balance. Passbook shows less, but we don't want passbook because we start with the cash book. Therefore, cash book shows more balance. More balance. Cash book shows more balance. So just see, cash book shows less balance and passbook shows more balance. More means less. So we have to show this in the less column. So for that less, you write here that is bank debited passbook or bank charges debited in passbook. Bank charges debited, bank charges debited in passbook. Bank charges debited in passbook. Bank charges debited in passbook. The amount is given to the extent here 2,700. Oh, sorry, it is 300 only. 300 bank charges. So just see once again, can explain here. Bank is debited means bank debited means it record on the payment side, so that will be it is less balance. And passbook less means cash book more means less. Therefore we have to show this less. So these are the prior terms which is given to us. In this correction, we will take this total and put it out. So this total will be 0, second level 12, carry 1, 336,200. That's 20, 7 plus 5, 12, 37 and 5, 12, carry 1, 336. Now we have to add this. First 0, second 0, 2, 11, carry 1, 21,600. After making addition. Now I take this total, sum of these two figures, it comes to 4,800. And from this we must deduct here, you will get the bank balance as per passbook here, because we start with cash, now ends with the passbook. You deduct from this, you get here 0. From 8, 1, 4 remains, carry 1 there, 5 on, 6, 5, 6 remain, and you carry 1 there, 16, 4 remain. Now just see whether it is correct or not. First 0, second 0. 1, 12, 8, 1. 4 remains, carries 1, 5, 1 from 11. 11 and 5, 6, 6, 5, 1, carry 1. Therefore from 2, 1 gone, 1 remains. So 16,400. This is balance as per. It is balance as per passbook. Like that we have to prepare the problems, and this is the problem which is asked in the examination, that is 2017 examination, which is asked for the examination 2017. It is for 5 marks. Like that we have to give the things in this case. Now after that, they are given to you here. That is, just see, they are given to you one thing here. Now, which is the one question they are asked to us here in this connection, just see. Prepare, they are given to us the preparation of the accounts here, just see. Now, you see here. Give the specimen of balance sheet they are given to you. Now we will see the final account in this connection. Before that, I will explain some points regarding the final account. So after completion of this reconciliation, we move towards the final account here, and the final account is like this. Just we see. First, I will explain the meaning of final account, and after that, I will give the format of these things, and after giving the format, pro forma of trading account, profit and loss account, we will solve the problem there. So now we will see final account first here. Final account. Final account. Final account of partnership of your study here. And another account is there, final account of not for profit concern. Two types of final account we are preparing in this year or a salary account, and that final account just to see there. In what is the meaning of final account first? The account which is prepared at the end of the accounting year by means of trading account, profit and loss account, and balance sheet is called a final account. So just see, it is prepared trading account. Another is profit and loss account, and third is balance sheet we have to prepare here. Now, what is final account then? Exact meaning for that I want to explain. Final account is a statement showing trading account, profit and loss account, and balance sheet. Prepared on the basis of trial balance and adjustment to arrive at net result and ascertain the financial position of the business is called the final accounts. Or in simple word, the account which is prepared at the end of the accounting period by means of trading account, profit and loss account, and balance sheet. Balance sheet we will see here in this connection. In this connection, we will see trading account, profit and loss account, and the balance sheet. This is the case here. Now you see trading account, profit and loss account, and balance sheet. So for that, they can ask you the final account. Now you see here. 1 minute, I will take this problem. हेलो ये क्लास वाला है क्लास नहीं करेंगे मुक्त विद्यापीठ और ये 4 या 5 नहीं करेंगे 5 नंतर now just here we'll see here what is the meaning of trading account first. So in trading account, it is a nominal account. All the direct expenses and direct incomes are recorded in trading account. So, and at the end, we are considering gross profit or gross loss. What are direct expenses? The expenses related to production is called direct expenses. Mostly that trading account includes opening stock, purchases less return, then wages, carrying work, and sales less return and closing stock. So for this, these are the things which can be included, and at the end we can ascertain the gross profit or gross loss is called the trading account. And after that, profit and loss account. Once again, profit and loss account is the nominal account. So on profit and loss account, all the indirect expenses and indirect incomes are recorded. What is the meaning of indirect expenses? Indirect expenses are those expenses which is not related to production. So indirect expenses are those expenses which is not related to production. Mostly it includes all the administrative expenses, finance expenses, and selling and distribution expenses, and that comes to profit and loss account. Therefore, whenever that is indirect expenses and indirect expenses are debited to profit and loss account, and indirect incomes are credited to profit and loss account, and at the end we can ascertain net profit or net loss. So just see here, trading account ascertain gross profit and profit and loss account ascertain net profit or net loss. Here gross profit or gross loss, net profit or net loss. And now this is the balance sheet. So balance sheet, it is not an account, it is a statement. So it is a paper, it is a document. It is a statement, it is a paper, it is a document. And for that, it has two sides. That is, balance sheet has two sides, like that. One is, left hand side is called the liability side of the balance sheet. It is liabilities like this. And the assets side will be called as here. Right hand side is called the assets side. Here, no debit credit principle that can be applied. So therefore, it is called a statement. It has two sides. Left hand side is called the liability side, and right hand side is called the asset side. So here, all the possible liabilities can be recorded on the liability side. Say for example, then the capital accounts can be recorded on this side. Then for that capital account, if there is a drawing, let's deduct drawings. Net profit is there. Add net profit. Net loss is there. Deducted like that. If you are providing this salary, it will be added there. Then interest on capital will be added. And on this side will be capital mostly coming here. And after that, outstanding expenses coming. Then sundry creditors, bills payable, and here bank loan, general reserves, it comes on this side. And here on the asset side, all fixed asset is coming. Fixed asset less depreciation that is coming there. So fixed asset, the advance cost, fixed asset, then other asset, current assets you can write on the asset side, mostly land and building, plant and machine, furniture, building, then freehold property, leasehold property, then investment, cash in hand, cash at bank, certificates, then bills receivable and prepaid expenses we can record and tell the matters. So here balance sheet. So what is balance sheet? It is the list of assets and liabilities on a particular date. So it is a statement showing the list of assets and liabilities on a particular date is called the balance sheet. On the right side of the balance, on the left hand side of the balance sheet, you show the liabilities, and right hand side of the balance sheet, you show the asset side. So it is the thing there. So once again, sir, we are making the assumption of all these things. So what is final account? Final account is a statement showing trading account, profit and loss account, and balance sheet prepared on the basis of trial balance and adjustment to arrive at net result and an ascertain the financial position of the concern. This is called final account. Or in simple word, final accounts are those accounts which is prepared at the end of the accounting year by means of trading account, profit and loss account, and balance sheet. So this is called the final account. So after seeing this, they are asked to us one problem for us. Give the specimen of balance sheet they give us. If they ask to us and giving the specimen of balance sheet for 5 marks, we write here capital. Capital here, then sundry creditors on the left side, sundry creditors, then bills payable. Bills payable is there on the debit side, means on the left side. Now we see there bank overdraft is there. Liability we can show here, bank overdraft. Bank loan retaining. Bank loan. Bank overdraft, bank loan, and here outstanding expenses. Outstanding expenses we can show here. And on the asset side, first we will fix the asset. Fixed assets. In that will be land and building. Land and building. Then furniture and pictures. Furniture and pictures. Furniture and pictures. Machinery. Machinery. Investment. Investment. Then we take here sundry debtors. Sundry debtors. Then another will be cash in hand. Cash in hand. And cash at a bank. Then inventory or closing stock. We get here closing stock. So like that, this is just to go on giving the format. So like that we can take into consideration your format. Like this. We'll see that. Now just see. They asked to us the 5 marks, the pro forma balance sheet. First we like that. The pro forma means meaning of balance sheet. So balance sheet is nothing but it is a list of all the assets as well as liability, or it is a list of assets and liabilities on a particular date. Our balance sheet is a statement showing the list of assets and liabilities on a particular date. It's called the balance sheet. And it has two sides. Left hand side is liability side, right hand side is called the asset side. On the liability side, we just record a few items here because we asked us pro forma. See here capital, then some creditors, bills payable, bank overdraft, bank loan, outstanding expense. And on the asset side, we'll see the fixed asset there. The list of the fixed assets, it comes to goodwill also, land and building also, furniture, pictures, then furniture and pictures coming, machinery is there. Then investments and debtors, bills receivable, cash in hand, cash at bank, closing stock, and lastly, this is the prepare. Why we have to prepare the balance sheet here? What is the object of preparation of balance sheet? The preparation of balance sheet is we have to prepare the balance sheet to ascertain the financial position of the concern. Whether our business is going on smooth way or not, whether it is going on profitable way or not, whether it is going on. So finding the financial position of the concern, we have to prepare the balance sheet. Then why have to prepare the trading account? We have to prepare the trading account to ascertain gross profit or gross loss, how much gross profit is getting. Then after that, we have to prepare the profit and loss account, intention object of profit and loss account to ascertain the net profit and net loss. And the balance sheet will be the main object of balance sheet to ascertain the financial position of the business or concern. So these are the asking thing, and they can ask this question too. After this, they have given to us preparation of trading account. They asked to us prepare trading account. So with the help of, they have given the question number 2 for C for 5 marks, and they have given certain items here: opening stock, closing stock, purchases, sales, wages, salary, trade expenses is given to you, and with the help of that, just we prepare the trading account. Then you know first will be what is the meaning of trading account. So trading account, it is a nominal account. All the direct expenses and direct incomes are recorded in a trading account. Mostly it includes on the debit side opening stock purchases less return and wages carriage inward, and incidental expenses of the production or the manufacturers. And on the credit side, it can shows the sales less return, the closing stock and balancing figure at the end. You get that it is gross profit and gross loss. If each that trading account debit side indicates gross loss and trading account credit side indicates that is net loss. Mean trading gross loss will be debit side indications, and if it shows the credit side balance credit side is heavier, you will get their gross profit. So it is the intention to preparation on this thing. With the help of that, we have to prepare here. They ask us prepare trading account. It is asked in the examination. So trading account we are preparing here, and they are given the information, and we have to ascertain the like this. This is the trading account which is asked us for 5 marks. We will show that trading account. Now it is the trading account. They give us to opening stock. We write here first place on the debit side opening stock is given to us. We ascertain the opening stock here. Opening stock. The amount of opening stock is given 18,000. 18,000 amount. Then after that closing stock is given. Before that purchases, no returns here. We write here purchases. Purchases. And for purchases, no, that is 15,000. And here I will write the sales. Sales go to the credit side. Sales. The sales amount is 35. No returns, respect to returns on purchases and sales. Therefore, mostly include opening stock purchases, less return. Return is not given in this case. And here credit side, sales less return. Return sales return is not given. Therefore, I have to write there. Then after that, there goes to closing stock. You write there buy closing stock. Buy closing stock. The amount of closing stock is 28,000. Closing stock 28,000. Sales, purchases. Then there goes to us the wages. You write here wages on the debit side. It is an expense. Comes on the debit side. All expenses are debited. 4,000. You write there. Then after that, salary. Salary is given, it is a part of profit and loss account, and trade expenses, that is also not taken into consideration. Because trade expenses, the relationship there, if there is a separate expense, then office expense, miscellaneous expense, at that time trade expense is taken to trading account. Regarding that, it is not taken here. Sales and trade expenses not to be taken because it is not clear the idea is close to us. So that's all here. We will ascertain this. With the help of this, we can ascertain. Because it is very side just here. First zero, second zero, third zero, 8, 5, 13, carry 1, 3, 3, 6, 63,000. Putting the same on the debit side, we ascertain the gross profit here. Just see how much you will get the gross profit here. Gross profit carried down the balancing figure here, and that can be shown to the transfer to the profit and loss account here in this case. Now we ascertain the gross profit by taking into consideration 3 zeros are there. 4 plus 5, 9, 9 and 8, 17, 17 and 6 will be 23. 17 and 6, 23 carries 2. 2, 3, 4, 4 means 2. You will get there gross profit 26,000. Once again, we will confirm whether that gross profit is correct now. We will see correct or not. We will see. First 3 zeros there, 6 plus 4, 10, 10 and 5, 15, 15 and 8, 23, carry will be 2, 2 to 4, 5, 6. Okay, these are the correct things. So, like that, it is asked for 5 marks, please. Just see here, it is asked for 5 marks. Out of 5, we will get 5 here. Just see how to prepare that. The available information given, opening stock is given. We record on the debit side 18,000. Purchases is given 15,000, no more return there. Therefore, return on the debit side. Wages is given 4,000, and sales, no returns on sales no returns on the loan also, no returns on sales, direct author, then closing stock is your stores 328,000. Now we have to ascertain credit side is area. I told you whenever trading account credit side area, it shows the gross profit, and whenever trading account debit side, it shows the gross loss. Here credit side is area. By taking the total sum of these two figures, you will get there 63,000. After 63,000, putting the same, you will ascertain the balance, and that is gross profit here. So friend, this asks for 5 marks. After this, one more question they can ask you. Prepare profit and loss account and with available information. So like that, we prepare profit and loss account by explaining the matter first. What is the meaning of profit and loss account first? So these are the things we prepare trading account. After this, we will go to the next problem, which is asked in the examination for 5 marks. So that 5 marks will be preparation of profit and loss account. Prepare profit and loss account. You prepare your profit and loss account. It is asked to you in question number, that is preparation D, question number 2. This coming question 2, D, for 5 marks, means for 5 marks. In the year, so here will be the accounts first. I have with us, it is 2018. In the year 2018. 18, it's asked for preparation of profit and loss account. Once again, we prepare profit and loss account like this, as we have prepared previously the trading account. So like that here also, we'll write here debit and here credit. Debit and credit, and here we write as usual. This will be the particulars columns, particulars and amount in rupees. And here particulars once again, amount in rupees, Then I'll explain first what is the meaning of profit and loss account. So profit and loss account is a nominal account. So all the indirect expenses and indirect incomes are recorded in profit and loss account. All the direct expenses are debited to profit and loss account, and all the indirect expenses are debited to profit and loss account, and all the indirect incomes are credited to profit and loss account. Because profit and loss account, it is based on the principle of nominal account, and you know the burden rule of nominal account, debit all expenses and losses, where expense that it is debited, and credit all incomes and gains, wherever the incomes are made, it is credited. Like that, you must not see these things here. Now, they asked us, just once again, I will explain what is the meaning of profit and loss account. So profit and loss account is nominal account. All the indirect expenses and indirect incomes are recorded here in profit and loss account. All the direct expenses are debited to profit and loss account, and all the indirect, I mean mistake here, all the indirect expenses are debited to profit and loss account, and all the indirect incomes are recorded in the credit side. And at the end we can ascertain net profit or net loss. So profit and loss account credit side indicates the net profit, and profit and loss account debit side indicates net loss. So like that we have to see this thing. And with the help of this, the main objective to preparation of profit and loss account is ascertainment of net profit or net loss, and from this we ascertain the net profit, which is asked for question 2D. Marks will be 18 for 5 marks there, 2018 examination class. So you have made diagrams for gross profit. We write this by gross profit brought down, because you know with the help of preparation of trading account we ascertain the gross profit, and that gross profit can be transferred to profit and loss account. So here profit is there going to the flip side, by gross profit brought down is 40,000. Then expenses can be recorded. Salary being expense here, it is debited, and no more adjustment of discount there. You write here to salary. Will be debited. The amount of salary is yours to be 8,000. Then audit fees is there. It will be debited being the expenses and indirect expenses. Audit fees. So all the administrative expense, office expense, Finance expenses, selling distribution expenses is debited. And your incomes are credited. Thus the audit fee being expenditure, it is debited, amount being 3,000. Then after that, there goes to you, commission received, which is an income. Therefore, by commission received. By commission received being income here. All the incomes are credited, like that we have credited this income, so far commission received and credited to the extent of 2,000. These 2,000. It being 2,000 extension. Then interest paid being expenditure debited to interest paid on the debit side of profit and loss account, recording in the debit side to interest paid. The amount of interest paid is 1,000 here. So just separates the available information and the information is goes to you, gross profit, salary, audit fees, commission received, interest paid. So just separate how many items are there. 5 items given, 5 marks, and with the help of that we are now certain. Just if you represent this, you will not get full marks, you get 4 marks. So after recording this, after representing this, you are now certain whether you get net profit or net loss. You see definitely that net profit because credit side is heavier. It looks credit side here, right here to net profit. Net profit transferred to capital, which will be transferred to capital accounts. Transfer to capital accounts. The balance sheet they will get here. How to transferration? Just we'll see here. Just here. Now. See here, 42,000 is the amount here. 42,000 is the amount. Just 40. After this, we are certainly net profit here in this connection because 40,000 and 240 will come in, and you want 30 here, you get 30, 1 to 30, and here 8 and 3, 11 and 12, 12 and 0, you want to get 0, there is 1, that will be 30,000. So you will get the net profit in this connection, in this problem, in 30,000, you will get profit. If you mention in all respect, you get full marks, 5 out of 5 you get here in this connection. Just will confirm whether it is correct or not. This total is 2 figures summation is 42, and here 1, 2, 3, 4 figures we take, and it must be equalized to 42. Because 3 0 as it is, 1 and 4 and 12 carry 1, 4, 42. So that's it, and it is things they are given to us. Now you see here, they are given to you, prepare the capital account of Sarika, in this connection, the same question paper they can ask. Then what is capital, you know? Capital means money or money's worth which is invested in the business. It's called capital. And here Sarika is invested in capital account, and they ask for preparation of Sarika account here in this case. You know the partnership firm. Partnership firm means they are given to you. So more than 2 persons come together and form organization, and that organization called the partnership firm. So in that, they ask us the once Sarika's capital account. So money or money's worth which is invested in the business by the proprietor, means by the proprietor or by the partners, is called the capital. And they ask us the preparation of capital account, how to prepare the capital account. Like this, it is also equation they can ask. All problematic things is given to us. Just see here, the problematic thing will be taught on the Sarika's capital account. Prepare here. Question D here. Question E now. So it is asked for 5 marks. 5 marks. Asking will be Sarika's capital account. Just separate here. Just you see preparation of Sarika's capital. I write here Sarika's capital account. Sarika's capital account. Say like that. Always in the formality comes to the credit side and credit side. So make here debit. Sarika's capital account. Asking for 5 marks, and the information is also given to us. Now let's see here. Write here particulars on the debit side. The amount in rupees coming on that side also here. And here are particulars once again on the credit side. And that will be the amount on the credit side, like this credit balance. Now just see here. We'll see here the accounts for Sarika's capital opening balance is given to you. So capital account always shows credit balance by value brought down. So So opening balance of Sarika is yours to you, 20,000. 20. And then goes to a profit. So profit, right here, buy profit or it's called net profit of Sarika. So enjoy the profit here in this problem, 3,000. So going on the credit side, profit, credit side of the capital. Whenever loss coming on the debit side. Then drawing is yours to you, it comes to the debit side, two drawings. And interest on capital, once again it is going on the credit side, by interest on capital. Interest on capital. Just see here. Here also the annual source defined. Drawing is given 4,000. Profit is given 3,000. Interest on capital is 1,000. So just see plain here. Only 4 figures is given. The items is given only 4. With the help of this we can ascertain the carried on balance. Then the closing balance of Sarika. Credit side is here. You see here credit balance. 1, 2, 3, then 4, 24,000. The total would be debit side. Then you assert the balance. Two balance carried out. You will get there 20,000. So Sarika balance you get there 20,000. Sarika balance you need 20,000 here. Just see you will get a balance 20,000. So for this also it's asked for 5 marks. 1, 2, 3, 4, 5. Each and every item 1 mark. Again you will enjoy full play mark here. 5. This here. 5 marks you get. So they will give you on this question. If it is correct, you pay allowed 5 marks on this. So 5 marks. Now, just we'll see the preparation of balance sheet task. Simran's there was the balance sheet. Now prepare. Just see question number 3 now. What is the question number 3? Just we'll see here. And as for this, the important. Prepare the balance sheet. I will explain today for the first is final account. In that final account, the meaning of final account I am already told to you. In that trading account is there. I explain the trading account, problem is asked there. Then after that, profit and loss account, once again there has the problem. Here capital account they ask you, now you have to prepare that also. Then now they can ask you the balance sheet. So it is a part and parcel of the final account. What is the meaning of balance sheet I told just now? And I will explain once again, make the assumption for that. So for this balance sheet, what is balance sheet? Balance sheet is nothing but it is a statement showing the list of assets and liabilities on a particular date is called the balance sheet. So that balance sheet will take here. Now we prepare the balance sheet here. They ask us, what is the meaning of balance sheet? It is the statement showing the list of assets and liabilities on a particular date is called balance sheet. And we also show that format which is asked in the examination. That also show that. Now they ask to prepare the balance sheet here. Once again, very simple question they asked us. Prepare the balance sheet from the following information. So there are two partners, Simran's and Rupali's. Rupali's capital. Simran's capital and Rupali's capital. So we must show this balance sheet and prepare the things here in this case. Preparation of balance sheet here. We write here question number 3A is there. Is question 3 and that will be the A in the same question paper. We see that. What is balance sheet? Now we'll prepare the balance sheet. Balance sheet and on dash dash dash. So date is not given to us, therefore write down like this. Then you give the correct format of the balance sheet like this. The correct format of the balance sheet is like this. This balance sheet. It is left side. It is a balance sheet of Messrs. Right here on the top there are two partners here. Messrs. Rupali and Simran and Rupali. There are two partners here. It is a balance sheet of partnership. It is a balance sheet of partnership of Simran and Rupali balance sheet. at all. Debt is not current, therefore liabilities then amount of this. Like that, assets amount of this. Now we'll show this thing here, which is cost. Preparation, they are going to Simran's capital and Rupali's capital, and profit sharing ratio is going to us and profit is gone. Just see here, first you write here Simran's capital. Simran's capital account. The amount of Simran capital is given to you while we prepare here two column. Means here Simran's capital. So in that Simran capital, we prepare here two column, inner column and outer column like that also, because we have to distribute the net profit between themselves. Then here assets, inner column and outer column. We will prepare like this. Amount in rupees. So the yours to the Simran capital. The amount of Simran is 18,000. We show here 18,000 Simran's capital. The next thing is Rupali's capital. Leaving some space here, right here, Rupali's capital here. Rupali's capital. Leave some space there. And that becomes to us the Rupali's capital is 9,000. 9,000. 18,000 is the Simran's capital. Rupali's capital is yours to us 9,000. I'll get this amount inner column because the so-called net profit is there. We have to distribute and add the net profit to that capitals. Now Simran's is gone, Rupal is gone, then profit is gone to you. Profit 9,000. So 9,000 is the profit. We distribute that 9,000 profit in the ratio is equal to 2:1. In the ratio of 2:1 between Simran's and Rupali. So between Simran's and Rupali, that 9,000 we have to distribute here. If you distribute 9,000 by 3, you will get a base there 3,000. 3,000 into 2, you will get there 6,000, and 3,000 into 1, you will get there 3,000. So in this connection, the so-called profit arrived here in this connection. Just see the profit arrived in this connection is 9,000. In that profit, Simran will get there 6,000 and profit or net profit, or you can take call here profit 6,000. Then here add profit of Rupali 3,000. Profit of Rupali 3,000. Then now we see bills payable. Now we take this total and put it out here. 18 plus 6 is 24,000. And this is 12,000 of Rupali. Simran will get 24,000 there. Then after that bills payable, we can write here, right on the left side, bills payable, which is yours to us, the information. Bills payable. The amount of bills payable is 4,000. Oh. After that 4,000, building is there. It is an asset. Going on the asset side, building there. Building. The amount of building is 12,000, and there is no more depreciation. Directly going on the outer column, 10,000 being the amount there. 12,000. After that, motor. So it is an asset. Going on the asset side, motor. The amount of motor is 18,000 worth. Then another is furniture given to us to the extent of that amount. The furniture being asset, once again going to the asset side, 8,000 there, 8,000. Then after that, debtors is there, no more adjustment of debtors going on the asset side, debtors. So in the previous things I showed the formatting of the balance sheet. In that debtors is coming there 2,000 debtors. So everything over here. Debtors 2,000 and profit sharing ratio. So friends, it must be tallies. Just see whether it is tallies or not. Must be tallies. First 30 8 at 10 carrying 1 there means 2 to 4, 40,000. So that is also exactly 40,000. Get carrying matters. First 30 8, 8, 16 and 20 carries 2 and 40,000. Just see, this is the balance sheet. Which is asked for 5 marks. How the marks are not made? Here just see 1, 2, 3, 4, 5, 6, 7 means half mark will enjoy for this round and then getting the tally values, which is the balance sheet. There is the balance sheet of partnership of Simran and the Palis. So information given to you, 9,000 is the profit, profit sharing ratio given to you 2:1. So that will be distributed 6,000 and 3,000. So I like here children's capital 18,000, additions of profit as per her share is 6,000, going out at 24,000. Then Upal's capital 9,000, she enjoy the profit 3,000. Addition of this going to the outer 12,000. And a 6 are, there are 4 6 on a 6 side. First is building 12,000, motor will be 18,000, motor will be 18,000 and furniture will be there. Just see here 8,000, later 2,000. Totally not 40,000 there. So after that we'll see here. Now we'll see here. Another is they can ask to us. Now we will see, give the journal entries. Give the journal entries of this thing they are to you. After that, prepare the production account. Production account they ask us. What is the preparation they ask you? The production account means it is a manufacturing account they have to prepare. So manufacturing account is the account which is prepared for the manufacturing. All the manufacturing expenses are recorded and we have to prepare in this manner. They can ask for us to prepare the they are given to us the preparation of production account. We prepare production account. Just see part B here. Now you see the same question paper number 3 D part. Ask for par marks. Once again it will take this and prepare the production account after completion of this. Just see. Just here. Now production account question number, it will be question number 3. It will be question 3D. Question 3D. Asking production. That is manufacturing account. It is also called production account. Prepare. How to prepare the production account? As well we can take the levels. Like trading account, we have to prepare debit and the credit. In that production account will be first diagnosed you purchases and sales, factory expenses, wages and sale of scrap items. So now that this first will be here, first will be to cost of production. First will be cost of production. Cost of production. How to ascertain the cost of production? The cost of production will be opening stock is not given. Opening stock is not given. Then cost of production will be opening stock not given. Nil. Then purchases and purchases is given to us. The amount of purchases 40,000. Amount of purchase is 40. Then is purchase is 40,000. Product factory, sale of scrap. Now we take here. So closing stock is also not given as closing stock. Not given. Nil. We will get here 40,000. The amount will be factory expense. Factory expenses. To factory expense. The amount of factory expense 3,000. And the advance to us sales. Buy sales. Sales 70,000. 70,000 by sale of scrap. Sale of scrap. The amount of sale of scrap is 1000, and the expenditure purchase is taken, sale 70,000 taken, factory expenses 3,000, wages also was taken, factory wages, considering that wages 2,000 and the sale of scrap is 1,000. Now ascertain to cost of production. That is called cost of production. Material, cost of material, the cost of production. How much you get here? See. This is area 71,000, and from 71,000 you get the balance, that is the cost of production is coming here 0, 0, 3 to 5, 5 and 6, 5, 11 carry 1, 5, 5 plus 2, 5 plus 2, 7, 26, 5. This is the amount which can be coming here, and that is the production. After that, there goes to you now just see here income and expenditure account as was. Income and expenditure account they asked was the preparation of income and expenditure account. So we have to take into consideration preparation of final accounts of income and expenditure account. Firstly, I will explain what is the meaning of income and expenditure. In that connection, we will see what is the meaning of not for profit concern. Now just see, there are two types of concern. One will be profit concern, that is trading concern, and another is non-trading concerns. There are two concerns. Number one will be trading concern. Trading concern. Another is non-trading concern. So I will explain this meaning first, trading concern and non-trading concern. What is trading concern? Trading concern are those concerns we can do in the activities of trade. And they are doing the trading activities, the main objective is to earn the maximum amount of profit, maximization of profit here. The objective is maximum profit. Trading concerns are those concerns which can render the services of selling, buying and selling, and doing the trading business, and they can objective is to ascertain the profit. Another concern that is called non-trading concern. Non-trading concern are those concerns which is established for not for profit making. This is established not for profit making. It is established to render the services to the welfare of the people, public or society. And main objective is not to earn the profit. So it is established without profit motive, and that is called trading concern. In that trading concern, the final account they can prepare by means of first will they prepare receipts payment account. Receipts payment account. They can prepare receipt payment account. Another account will be income and expenditure account. Income and expenditure account they can prepare here. And third, they can prepare the balance sheet here. Balance sheet. Balance sheet. I will explain one by one. What is the meaning of receipts and payment account? Explanation of receipts and payment account is like this first. This is the account which is prepared in case of accounts of not profit concern. Receipts and payment account. It is a summarized statement of possible receipts and possible payment. It is called receipts and payment account. All the possible receipts are recorded on the receipt side, and it includes last year receipts, current year receipts, and next year receipts. And on the payment side, all the possible payments are recorded on the payment side. It includes the payment of the last year, payment of the current year, and payment of the next year. It is prepared to ascertaining the opening cash and bank balance and the closing cash and bank balance. It is prepared the intention of the receipts and payment account is a real account, and the main intention is to ascertaining the opening cash balance and bank balance, like that closing cash balance and bank balance. Okay. After that, they can prepare the income and expenditure account. What is the meaning of income and expenditure account? Income and expenditure account is as good as profit and loss account. It is as good as profit and loss account. So it is nominal account. All the expenses are debited to the expenditure side, and all the incomes are credited to the income side. All the revenue, incomes and revenue expenses are recorded here in income and expenditure account. And another they can prepare a balance sheet to ascertain the correctness of the things. So here, what is income and expenditure account? Income and expenditure account is nominal account. It is prepared to ascertain surplus or deficit at the end of the year. Then what is surplus? Excess of income or expenditure is called surplus. And what is deficit? Excess of expenditure or income is called deficit. So for this is prepared and balance sheet as usually know. There is a statement of a list of assets and liabilities on a particular day they can prepare. Like that, they ask to us to prepare income and expenditure account. All the expenses are recorded, and at the end it can ascertain the surplus or deficit. Like that, it is final account, but not earnings of final account. And that's called the what is not for profit concern. This is the concern which is established to not render not to earn the profit, render the services to the welfare of the people or public, like that. Now let's see here, preparation of income and expenditure, which is asked for the question number in this question paper, question number 4. 4 is question number 4. Question number 4, it comes to D part, and which is asked for 5 marks. 5 marks. Prepare income and expenditure account from the following information. I will prepare here income and expenditure account. Income and expenditure account. Income and expenditure account I have prepared here, and in that formatting like this, name is here, it is for the year end date, which are right there, for the year end date, date is not here, for the year end date, that should not be. Now we take care, first we do the expenditure. Expenditure is the first thing. Expenditure first. And here, incomes is the second thing. Incomes, amount. Now see here. So in that connection, the possible expenses we write here on the expenditure side. First we do the salary, highlight here to salary. Salary being the first item on these items, that is income and expenditure, salary 20,000. Yours first, write down 20,000. Another electricity, once again expenses, take on the expenditure side, electricity. Electricity is yours to 3,000. 3,000. Then rent credit balance means it is by rent received. By rent it is. It is an income. Rent received is yours to on the credit side 2,000. It is rent received income. Then insurance is an expenditure coming on that expenditure side to insurance. There are no more adjustment, it is down here. Insurance 1,000. 1,000 insurance. Then admission fees coming on the left side to admission fees. So it is an income part that. So admission fees being the income. Admission fees. Admission fees being an income there. So write down that income 12,000 the income side being an income there. Then sundry receipts are coming on the credit side by sundry receipts being income coming on the credit side, and 8,000 income. 8,000. Then after that, office expenditure, two office expenditure coming on the expenditure side, office expenses 2,000 there. 2,000. So rent, salary is coming, electricity coming, the salary being expense, dividend, electricity being expense, dividend, rent, credited being income, insurance being expenditure on the credit side, admission fees being income on the credit side, I mean, income side, sundry receipts is income and office expenditure is the expenditure. You will get here two surplus. Two surplus you will get here because credit side is heavier. The total sum of these credit sides coming, income side, 10 and 12 carry 1, which comes to 22,000. 30, 8, 10 and 12 carry 1 to 22,000, putting the same 22,000 on the left side. Surplus, excess of income or expenditure. Excess of income or expenditure right there. They will ascertain surplus of receipts. Surplus, how much will be here? Just see 1, 2, 3, 0. Then 3 and 4 and 6. 6, 6, 12 carries 1. 6, 6, 12 carries 1, 3 there. So I made mistake here. Salary is 20,000. So here it is a loss here. No surplus here in this case. No surplus because debit side is heavier. Because 20,000, 12,000, 8,000, 20 and only 20,000 there, 76. So this being heavier. So no surplus in this problem. Now just see. Because credit side is debit side is heavier, expenditure is more. Therefore, you will get a receipt. So take this total. 1, 2, 3, 0. 2, 3, 5 and 25. 25,000. Putting the same on the credit side, 25,000 by deficit. What is deficit? Excess of expenditure income is deficit. What is surplus? Excess of income or expenditure is surplus. You will get your deficit, which being right here in the bracket, excess of expenditure over income. Expenditure over income. So being balance, if you get here, we lost here, you will get deficit here, 3, 0, 2, 2, 4, 4 and 12, 12 and 3, 15 carries on 1, 1, 2. 15 carries 1, 1 and 1, 2. 3,000 you get 36. So that's it for these things. Now preparation of receipts and payment account and the other things we'll see in the next period. That is bill of exchange remain, depreciation is there. So that we'll see in the next period. That's all. Thank you very much. We'll wait here. Thanks. Madam, something. एकच टॉपिक ठेवला एक टॉपिक ठेवला पुढच्या वेळेला लाव कसं